It's now time for our currency report. We want to take a look at the trade-weighted U.S. buck in times of trouble. Often it gets a haven play. Hasn't been really working out that way for the past couple of days. Let's try to figure out why and what's going on. Adam Button's chief currency analyst at Forex Live, and he joins us now. Good to see you, Adam.
Hi, Greg.
All right, so let's talk about safe haven trades. I mean, we understand the classic haven trades, but I think at some point this week, there was only one game in town. It didn't appear to be the U.S. buck, didn't even appear to be gold.
Well, you know, there is a bit of a rethink in the currency market, especially around the euro. The yen is the classic safe haven, and money is kind of flowing into that, but not as strongly as it used to be. And today, and the last 5 days, it's really been diving into the euro, and that's because it's the low yielder now. And there's so many euros in the rest of the world trying to find some positive carry, and now they're starting to come home. So we're seeing a bit of a rally in the euro.
All right, so basically a lot of strange mathematics going on there right now, because of course there's a lot of unknowns around the coronavirus. We simply do not know, as you know, market watchers and investors, how bad the actual virus itself, like the human toll, translates into an economic toll. No one can really put a hard number on that yet.
Well, and it's sort of uncouth to talk about sort of the financial impacts of a global pandemic, a devastating global pandemic, the worst event in our lifetimes it would be. But if it is, you know, if the worst case scenario does come to pass, where do you want to be? And the currency market isn't sending very strong signals right now, but it is the U.S. dollar. As things start to unfold, there's dollars around the world. Imagine it being an emerging market currency that's destabilized by any sort of coronavirus. It will head into U.S. dollars as that safe haven. And I expect to see more of that. We hit a 5-month high today, in the Canadian dollar. And, you know, we could start to see that cascading move out of Canadian dollar. Australian dollar, its cousin, is already at a 10-year low. And I think the Canadian dollar is probably on its way towards that as these headlines get worse and worse. Where
would that take us then? Like, where could we settle out? I guess, yeah, with oil prices going down, with China perhaps not buying as much of our commodities, it's hard to give a bull case for the Canadian buck, but how low could it go? And
I think the way it unfolds, I think we get to 68 cents. If it gets bad,
68 cents.
That's the low from 2016. And I think we could probably undershoot that if it gets really bad. And I think the way it plays out is we play this game of whack-a-mole for a while. So an outbreak pops up in Norway, for instance. We sell the Norwegian krone. And then you go on and on. But at some point, whether it's 5 countries or 25, you realize, okay, this is going global. And then it's a global growth slowdown trade. And the Canadian dollar is in a bad spot if that's the story. If it's a global recession. Oil. There's no bottom in oil. If you lose 5 million barrels per day of demand, there's nowhere to put it. There's no storage there. There's no bid at all. And the Bank of Canada will cut rates, and you just see the Canadian dollar fall very rapidly. And then I think the market starts to look, in a global pandemic, who can handle it? Which countries are suited to handle it? Canada, very stable politically, relatively stable socially, fiscally, it's in better shape than most other countries. And I think that will probably be the time to buy the Canadian dollar if we got to that point, just because, for instance, in the U.S., you have political instability coming. And worse than getting the coronavirus would be leaving the hospital with a $50,000 or $100,000 bill, which is what would happen in the United States. And I mean, it would be devastating for the economy and the health insurers.
Makes me glad that I am a Canadian living in Canada. Wanted to talk to you a bit about the Bank of Canada. At this stage, the World Health Organization has still declining to declare it a global pandemic. They seem to be leaning in that direction, but they still haven't gone there. Is this enough by the time, I know we have a meeting next week, but I mean, we're not going to, the market doesn't think we're going to get anything. By the time we get into April, it seems that a lot of bets are starting to increase, that Governor Paul is going to have to do something with the rate before his time is up.
It's true. I mean, the Bank of Canada is probably going to follow the Fed. And we have the Fed in the middle of March, and that gives them a little bit more time to gauge things than the Bank of Canada. And you know, every week, it can happen so quickly. 6 days ago in Italy, there were 5 cases. We just hit 600 this afternoon. So who's to say that doesn't happen in Vancouver or Toronto? And then, yeah, we are cutting next week. So, you know, everything is on the table at a moment like this, and you see it in the market, 1,000-point moves in the Dow, and the currency market bouncing all over the place as well. And there's going to be that demand for havens, I think, is ultimately where we're at, and bonds just aren't paying anything.
How nimble do we have to be in the trade if, I mean, I'll put on my optimist hat, that we get a handle on this thing. It doesn't become a pandemic. We get through it, and not a lot of damage is done.
You know, what I have to say about that is that this isn't going to clear up in a week, right? You know, the market gets ahead of it, though, as we've seen this week. So there is always that risk, and I think we're going to see that ebb and flow. It's not going to be declared a global pandemic or a clear global pandemic overnight. So that's the ebb and flow of the trade. And if it does get better, we're back to where we were. And the Canadian dollar is a good place to be. But it's very binary at this moment. And eventually people have to decide. I think one good spot to weather it is gold, because I don't think there's too much downside in gold, and there's tremendous upside.
Yeah, gold's been an interesting trade. Obviously, heading into this week, it was hitting 7-year highs, and then a bit of steam came out of it, and I think that left some people scratching their heads as well.
And we've seen that in the currency market as well. There was a big drop in the yen last week, which it was sort of counterintuitive, and that looks to me like flows and esoteric selling and that sort of thing. And it came kind of back in gold today. We were up $30 and then gave it right back. So, whatever market you're in, you have to be able to weather the volatility. And I don't think any of us as investors in the last decade have had to weather that kind of volatility that we're going to have to live in now. So you better love what you're in, be it Canadian dollars, US dollars, or gold.
Adam's always good to get your insight. Thanks for joining us.
Thanks, Craig.
Adam Button's the Chief Currency Analyst at Forex Live.